Welcome back, ghouls and goblins. I hope you're having a magical day, and thank you for stopping by to talk about GameStop. It is National Cat Day. We didn't really see an appearance. Greg made a bit of a tweet. He's always out farming. You would expect nothing less of them, but as far as GameStop goes, we've really retraced quite a bit. The other week, we were on this bottom trend line here. Ryan puts out the Mario Kart tweet with Ryan, right? We kind of move up from that, and then we get the White House tweet, and that was really aggressive here, which was really cool. And we had a technical entry here, which is pretty cool because we invalidated an order block here, turned it to a breaker block, took our entries, showed you guys how to set your risk, and then we scalped it up and even got a 2-to-1 risk reward on our options play there, which was really nice. And you could have done that with shares as well, no problem. My options play did 88%. So that can just show you the power to learning how to play options appropriately. Obviously, we recommend options as a strategic investment, as a read. Go through some of those chapters that we've talked about. You don't have to go through the full 1,000 pages, but get up to speed. And then we've kind of started to incorporate a little bit of that into the daily videos here, going through the different Greeks and what have you. So we'll get back into that in the days to come. I've been a little bit busy here with my personal life, but as far as the technical analysis for right now, it doesn't look terribly good moving forward, but it's GameStop. It doesn't ever look that bad, right? This is the bad, and we're already there. So risk reward wise, things are beginning to look a little bit nicer, right? Like, I wouldn't want to be entering up here. I would want to be entering down here. And so because of that, my risk is not this deep, it's just this deep, right? So it's much, much better. Meow. Happy National Cat Day. One fast cat, the cat wheel here. If you have a kitty, they will love it. However, don't put it in your bedroom because they're going to be running on this thing all night. You're never going to get a minute of sleep. So, current risk reward looks really nice. Loving this bottom trend line to accumulate common shares, right? For the option plays, I need an entry model. I'm a technical trader. I don't necessarily enjoy the date forecasting. However, we have been speaking to Beckett, the cat, the duck, whatever. This individual believes that GameStop's going to be at 27, 28 by November 5th to 11th. So if that pans out, I will dedicate a lot of time, 100 hours, I said, to studying this spreadsheet and fully mapping it out. However, until then, I just remain a technical trader. And things don't look great. We're going to probably continue just bouncing off this bottom trend line. Maybe we get back up to our resistance level. So 35 days until earnings, resistance at 25, support at 22 if you were selling options. Sell your puts down below 22 and sell your calls up around 25 or something. So you do have some time until that IV starts to really tick up for the earnings run up, right? People are going to start placing bets for earnings, and that's going to grow the IV, and that can absolutely decimate your contracts. However, at this point, we look to go long on some options and take advantage of that, right? However, we got some time until we're there. As far as an entry model goes, I don't necessarily see it yet, but if I do, I will let you know. So yeah, let's take a look at it. We're down 0.6% this evening, up 0.3 throughout the day. So basically just kind of trading sideways here. And, we're going to do that for extended periods of time, just, kind of hugging this trend line, which is fine because as time goes by and we continue to do that, our floor is up, 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 and away. So in the 15-minute chart here, and this kind of like ruined our trade setup. At one point, we're happy because we were already in, we had exposure, we can scale out profitably here, which is really nice. But long term, it forces a reset, and now we're just kind of sitting here with things looking bearish. They could, by all means, bounce up tomorrow. We had the Fed rate cut today. Um, Not as steep of a cut as they would have liked, but it's still hit, and all of this is forward looking and priced in ahead of time. So, um, we see maybe a bit of a delay on the go-go juice, but again, because of where we are, I think we could definitely see that moving forward. Um, and then we're just looking for, again, the reversal signal. I'm a very simple trader. I used to use all these, the PSAR, and there's just so many indicators I've used in the past that we've been able to get rid of, and just simplifying things. And it doesn't have to be complicated, right? Um, I have a 21 exponential, a 50 exponential. We want to see those flip, right? At which point I want to see the price not reject a key level, which in this case will be the 200, but reclaim it. So get above it and then base on it. Use it as support instead of resistance, right? So um, we've got some work to do here. Of course, all of this is lagging. The price could jump up above, and then these things switch just like that, like we've seen here, right? And again here. So they do go very quickly, but this is what I look for. At which point I'm in the 1 hour chart and just kind of zoom out, and well, we want to see the same thing, but we don't. We see a bearish signal here, right? We're bleeding down day by day. We lose our key level, the 200. We have the bearish reversal signal here. So, we need to see these flip back on each other, and then the price again reclaim the 200. It's going to be the same thing over and over. And if we can't do that, we're just back down to the bottom trend line here. And then if we get that, same thing on the 4 hour, which we've been trying to do for some time. We have a potential reversal here where the price was above the EMA, so they wanted to reverse. You see they start, converging on one another. But unfortunately, the price rejects aggressively off the 200, not reclaiming and basing, reclaiming and then breaking down, right? So we need to see that level hold. We see it reject here really aggressively too. And until it does, it's just, it's not great, okay? And then on the 1 day, the exact same thing here, massive rejection on the 200 EMA. And then, the 21 and the 50 are nowhere near reversing. We're just bottom trending. Things don't look great. Um, it is what it is. Um, However, again, these are all subject to change, and we have individuals forecasting some potential volume based on swap rebalancing. I don't really understand. I've not gone into it. I just focus on myself. I got a lot of other trades going on throughout the day, right? So to dive in and dedicate a lot of time to learning how to participate within the Ouija board is it's a daunting task. I'm scared of ghosts. However, if we see this pan out, like I mentioned for them, then we're definitely going to dedicate some time to it. They're obviously onto something, and we'll have to wait and see, right? So, again, GameStop has some time until we get there, but things could change, and it's only 35 days until earnings. So, we've waited longer periods of time, anyways. I want to get into the last earnings report because we got the warrants, and everybody got distracted with the warrants, and we all forgot about the power packs. How much did the power packs even make? I don't even remember. Was that released? And then that's kind of what we're going to be looking for on this earnings report, to see, is this really the cash cow that people think it is, or is it just, another itty bitty brick to the building, which is fine as well, right? So on the kitty charts, the RSI is chilling. We're really not having much luck with the 50 mark here, and we want to break through that, right? We definitely want to expand up from the 50 to the 70, at least challenge our downwards trend line here. So a couple key levels that we're looking for here on that RSI before we're like, oh yeah, this is bullish, because this is potential rejection. If it breaks that, okay, we're bullish, but now we're in another rejection zone, right? If we break that, okay, now we're bullish again into the 70, and then things are like, okay, maybe we need to be thinking about the turnaround and reversal back to it being bearish at this level, right? We're obviously not there yet. So looking at the simple moving averages, now these are a little bit different than the exponentials, which is what I use. they're a little slower, right? So not as much whiplash on them than back and forth, which you see in mine a little bit more. And then 2050, which is basically 2150, the same as I'm using. And then the 100 instead of the 200, so a little bit faster of an average there on that green line for the 100 instead of the 200. And things are looking pretty bearish here. There's death cross, I guess, and these need to revert backwards, right, on top of each other in the same fashion I was just explaining with my EMAs, right? So not much going on there. The volume's not here. Off exchange volume is percentagely high, but that percentage is still on a low average, right? So it doesn't matter to me, anyways. Momentum is still positive but cooling. And then compared to the market here, I like to just check a couple spots. Looks like we're trending basically, right where we want to be, 20%, 18%. Again, 18, 13, a little different. And then a little bit more short term. I guess we're probably undervalued, right? And then, it's one of those things where it's very arbitrary based on where you're starting the reading, but I like to do it based off of the bottom trend where we get clusters of candles. And I think that gives us a pretty accurate representation. And, we're basically, I think, at parity with the market. No drastic discount or overvaluing. The PMO on the 1 day has flipped bearish, which we expected, for some time now. And the 4 hour is still technically bullish as long as these can stay. However, with today's little bit of sell off, it doesn't look great. Could be, the peak of it here potentially if the week ends badly, at which point the 1 day is confirmed to not be good and coming back for some time, right? And this makes me nervous. This individual has these calls. Um, they're out of the money. They're short dated, and a lot of our classic technical indicators are not screaming. A bullish run in the short future, which again with these short dated calls you need to hit, right? So we'll pull those up and look at them as well. Here we go. We see the delta dropping down. It's actually up a little bit from yesterday. I didn't make a video yesterday. Nothing was really happening. So I just, what do you say, right? And even today's video, not much is happening, but you got to get in there eventually. So originally, delta was 36, gamma was 12, and the theta was 2, 2 or 3, I think 3. So theta is moving up a little bit. So that is a non-linear curve, right? Theta gets more and more every single day, and this will continue to increase exponentially, right? It's still, it's not a lot right now. It's inconsequential. But with the gamma dropping, the delta dropping, it's going to be harder to get the value of this contract up to where it was. Now, again, they were collecting here, right? They make their announcement. There was a bit of a discount here, a little early on the entry, but that's okay. Then we get the Ryan race car tweet here, I believe, right? We got a nice run up, and then the White House tweet for really, really, really good run up, but not a lot of volume on those, right? And they have a pretty large position. The position in general is substantial. 14th here. There are 32,000 of these, so this is more than that one individual. And well, someone is making a lot of money selling these, it would appear to me, specifically when we look at our indicator where that 25 is kind of the ceiling and 22 is the floor there. So they're not changing in value too much though, right? Specifically the last day, it's really hard pinned around that 0.6, which is their average, coincidentally. So a lot of volume on chain, and I fear that it could be difficult to exit these at a, the bid and the ask is going to be quite wide when you're out of the money, and when you have to sell such a large portion, you're going to melt it down and widen it. to its maximum, which is unfortunate, as you know that is your position. However, if it goes in the money, that's not going to be a problem, in my opinion. And those will get eaten up by the MMs right away. So um, the position for them looks good. I personally recommend that they scale out. I am almost fully scaled on my position. Just runners left, no actual risk. This is just house money at this point, which is fine based on our entry model the other day. We had that breaker block we talked about. I broke it down on the video for everybody. Um, so yeah, this is chilling. It's losing, a little bit of value. The indicators don't necessarily look good for me. However, I'm just a technical trader. I just trade the chart. I stick to that. These individuals have been tracking, FTDs and cat errors, etc. You name it. ETF, creation and redemption cycles. So, a lot of different angles that I don't personally have as a trader. But, if we do clear 27, they're projecting 28 plus. I'm going to dedicate a bunch of time to that, and then we'll have that under our belt as well, and we can use the two together, to become even better traders. So, um, things don't look great. We have our utilization is up high, 95%, which is aggressive. The borrow rate is chilling. 1% rebates down a little bit. Available shares kind of like swaying back and forth pretty aggressively. But you know, at the end of the day, it's not enough, right? We need to see this borrow rate climbing and holding and climbing and holding, day after day and week after week. When maybe it is, and we're just a little too zoomed in to tell right now. And that's exactly how I feel about this position currently. Is we just need more time to tell. Things are fine. They could be better, but whatever. And those puts are still on chain. December 17th. There's 200,000 $5 puts here on the original call chain GME1. And then obviously there's a bunch of 2027s as well, not as many, 35,000, 36,000. So watching these, maybe when they leave the chain, I think we get some movement. I suspect that any reversal signal that we experience now, without those being rebalanced, will be short lived. Okay, now that's just a hot topic or a hot opinion. Um, I could be wrong. I'm wrong a lot every single day. So Max Payne is chilling. I mean, the put to call ratio is super duper bullish, um, more bullish than I've seen it. But I think that this a lot to do with this being a new call chain where all the old call, which was weighted down with those puts, etc. Like there's a lot of shenanigans in this old chain. Um, really weighs it down, and then obviously there's very few people buying the old chain, so that makes it even worse, right? And then this, everybody's just buying the new chain, right? And some people are selling, like I seen, was it April or something, someone's selling a lot of $16 puts, it would appear, 10,000 of them, which are worth good money. Like these are worth like 78 cents each, $78, and then 78 times 10,000, woohoo, let's go, right? um, Buying a new car. So things look okay. The IV is just so low that I hate to be participating uh, in selling, you know, but I understand that people need to um, do their best. A lot of people aren't trading other things day to day. They have very large positions and they'd like to kind of make a little bit with that position while they wait. And, that's fine, right? Call sellers hate this one simple trick. Don't buy the strike and expiration that they're advertising, right? So, if someone's saying, hey, I'm, buying a whole bunch of 30s, buy 25s, right? Or 28s, or even a different expiry, in my opinion, right? So there's no need to crowd in on a single strike like that. Um, but again, to each their own. It does give good liquidity, like they're with so much open interest on that strike. It should be easy to get a fill, right? So that is very good. Um, and it's a little suspect. That's a lot of open interest on those dates, which is just a massive red flag to me. A ton of open interest out of the money. So, if I'm selling a call, that's exactly what I'd like to sell because it's really safe. The delta on it is really low. Zero point 0.3 delta. There's only 35% chance that this finishes in the money. That's just free premium, right? That's not bad. That's $60 per contract, and there's 60,000 of them on chain, right? So some big dollars here that's worth thinking about, right? So it is what it is. I kind of look at things from all angles, no matter what. I want everybody to win, and just reading it as I go, right? The best thing you can do is play entry models and scale out, protect yourself, so you don't get caught up on the wrong side of anything. So looking forward to the rest of the week. The interest rates, now that's in. We can kind of allow it to settle and bake, and where we move from there, no one knows. Um, I don't suspect that we remain on our bottom trend line too long, as the 35 days until expected earnings, and um, typically, if I can't get exposure through an entry model pre-earnings, it's when they announce earnings, right? GameStop will put out a press release saying, "Hey, you know what? Here's our earnings date." Um, at which point the IV will really start to climb at that point, and you can go long and just do an earnings run up. At which point, we're going to be scaling out that position before the earnings call, because we don't want to suffer IV crush. That's a market-wide phenomenon. It's just going to happen because people are placing bets for the earnings call, and then once the earnings call happens, the people leave that bet because it's over, right? Specifically the losers, and because all that weight is now shed off the chain, it's an IV crush, just like it was an IV ramp on the way up when people were placing all of those bets, right? When they remove the bets, that's when the IV is gone. So um, it's important to scale out before that crush. And then if you want to hold some runners with profits, with house money, that's okay, right? Um, yeah, I don't really have much. Maybe in the coming days, we can talk about extrinsic versus intrinsic value on our options, so we know when we're really getting a good deal on those moving forward. So if there's anything I didn't touch on for you guys that you want covered, let me know in the comments below. Happy hunting out there. Stay safe. Make sure to buy those commons on your bottom trend line, and I'll keep my eye open for any entry models, and maybe we can get some options plays here. Again, I don't personally recommend buying out of the money short dated calls. It's one thing if you are in an entry model with a trend, but when you're fighting that and timing bottoms, it can be kind of risky, specifically if things turned against us. So, yeah, play safe. Read the book. If you don't know how to play options and you don't understand those risks, don't participate. You can learn how to do this through theory. We've got the book for you, the PDF. You can just Google it and read it for free on your computer, or buy it. I've got the hardback, which I appreciate. Go to that all the time. And then once you understand a little bit, maybe follow along, watch some plays, understand how they go. Pull up the charts and watch them through an earnings cycle, or an entry model. And after that, maybe you paper trade, right? And then you do that a whole bunch and gain some experience, at which point you size in very, very small with profits that you made from common shares, right? Just a little bit of those profits, 10% of profits from a last play, right? Say you're bought down on the trend line here, and you're scaling out, maybe at the top of the gap, and then months go by and we're back down on the bottom trend line, and you can put a little bit of those profits in, right? This is a long game. It doesn't all happen at once. You can't force these things. At which point, you repeat that a whole bunch and you build that pile up, and then you can kind of size in a little bit more, right? So whew, you got a lot of work to do. You better get after it. Leave a like, drop a comment, subscribe to the channel, but most importantly, have a magical day, and I'll see you guys all soon in the next.